Chipotle, holy smokers, guys, another super popular stock has fallen big time, guys. We're talking Chipotle today. The stock was down $50 a share at one point today. Yes, you heard me right, $50 a share. Yesterday we talked about the AMD stock falling. Today it's all about Chipotle. And by the way, iRobot also fell, not as popular as Chipotle and AMD, but also still fairly popular stock based upon the comments I get, guys. So let's look at this Chipotle and why it fell so much. So as we see here, as of taking the screenshot, it was down about $47, but once again, at one point today, it was down over $50 a share, down well over 15% at one point. Now we look here, the stock has not been this low for 5 years. The last time the stock was this low was literally 5 years ago. We're talking about a long time ago, guys. So why did this happen? Let's look at these earnings here. They reported earnings. Now, as far as the top numbers here, it looks like this would have been a great earnings. Maybe the stock would explode on this, right? Chipotle third quarter diluted EPS increased 155% on 8.8% revenue growth. So if all you looked at was those numbers right there, you would think this stock is going to go up massively. These are unreal numbers because those numbers are unreal numbers, right? 155% growth in EPS, 8.8% revenue growth, really awesome numbers. But then when you dig a little deeper, you find it's not quite what it seems, guys. So let's look at all these numbers here. So revenue, as I said, increased 8.8% to $1.13 billion. Here's a bad number here. Comparable restaurant sales increased 1%. 1%. That is not very good, guys. That is not very good. Now, it's good that they got some kind of growth, but a 1% number, that's really bad, especially for a company like Chipotle. Remember, it was not that long ago before the whole E. coli situation and norovirus and all that stuff happened, right? Chipotle used to grow comp store sales at 6 to 10% pretty consistently, guys. To be at 1% now is just pathetic. It's just pathetic, guys. Restaurant level operating margin did increase to 16.1% from 14.1%. Net income was $19.6 million. Which is not that great, but it's not that bad. If we look here, Chipotle, this is a company that has a market cap of close to $8 billion. But they do have a forward PE of 27 right now, okay? So, it's not a super high forward PE, but obviously, based upon what kind of net income they had this particular quarter, they need to increase that drastically if they're going to hit that forward PE next year, guys. And something else to take into account here is, a 27 is still a bit high if you're only going to have comp store sales up 1%, okay? A 27, you would maybe expect more to like 2 to 3% type comp store sales number. So a 27 PE, it's fairly low for Chipotle overall, but considering how much Chipotle's growth has stalled, it may not be as cheap as it seems here. So let's look what the CEO actually had to say here. He said, we continue to make important progress to improve the guest experience at our restaurants during the quarter, said Steve Ells, founder, chairman, CEO of Chipotle. Our strategic initiatives in operations, innovating our digital sales platform, new menu introductions, and marketing the brand are starting to take hold, despite several unusual impacts during the quarter, which basically had to do with the hurricanes and whatnot mostly, including the impact of the hurricanes. Oh, there we go. I could have just said that. We maintained our focus and saw some encouraging signs. Our leadership remained focused on setting the foundation for future growth, and we are confident in our team's ability to deliver against those plans. Okay, that's what he had to say here. Now, if we look at the outlook for the rest of the year, for full year 2017, management expects comp store sales to be around 6.5%, but of course, they've weakened substantially recently, right? New restaurant openings slightly below the low end of our previously disclosed range of 195 to 210. An estimated effective full year tax rate of approximately 39.1%. For 2018, management expects 130 to 150 new restaurant openings. That's not very many, guys. When you take into account this past year was 195 to 210. So they're actually opening far less stores, and that makes a bigger impact on a company than you can even really realize, because you gotta understand, Chipotle, as they increase more stores, it becomes a bigger and bigger company, right? So new stores coming online, it's harder and harder to move the needle, right? If you have one store and you open up a second store, you could potentially double double your revenue, right? But when you already got several thousand stores and you're going to open, let's say 130, even if those stores do phenomenal, it's going to make very little impact on your revenue base and on your net income and whatnot. You really have to be increasing, if you got 2,000 something stores open, which I believe Chipotle does, right? You need to really be having 200 plus stores open a year to really start making an impact, really more toward 300 at that point, okay? So let's look at this here, guys. So Cramer, he says, Jim Cramer of CNBC, probably the most popular guy on the stock market other than maybe Warren Buffett, right? He's been on CNBC for like over a decade now. Cramer, he says, Chipotle stock is overpriced and should go lower. Despite Chipotle's efforts, the stock is overpriced and should go lower, CNBC's Jim Cramer says. I want to say it is a work in progress, but I'm going to say it is overpriced stock, Cramer says, all right? Then if we look here, this is this is pretty crazy here. This is affecting a lot of people, right? When shares of Chipotle peaked on August 5th, 2015, 4 top executives held stock appreciation rights worth $225 million, guys. 4 guys, $225 million. Now those are worthless. Those are worthless, guys. Worthless. They were worth $225 million. Now they're worth nothing, guys. Another person that's been hit by this whole deal is Bill Ackman. Bill Ackman can't catch a break on his Chipotle Mexican shares. They talk about avocado prices, hurricanes, and all that. After terrible results late Thursday, sending shares tumbling, Ackman lost around $120 million on his stake overnight. $120 million overnight, guys. But you know who's hurt the worst of all? Me. Not a huge amount of money here, but pretty fair. So here's what I was thinking. A year and a half ago, I was so close to doing $2,000 worth of put options at a $400 strike price, okay? And these were going to expire in January 2018, right? I was going to have to pay $20 per contract for those, okay? $20. Currently, those are trading around $122, guys. So we're talking about a 6-fold increase. And once again, I was only going to risk $2,000, so it only would have been a $10,000 gain. I did send that money in to win shares at that particular time because I was going to do it in the Chipotle, and I was like, Chipotle still had a lot of people that were kind of like throwing off because this was after the original E. coli came out, and I was like, this is going to hurt them bad. And a lot of people were just kind of like brushing it off and whatnot, and I was like, oh, do I really want to risk $2,000 in this? And I ended up putting in a win. Win's done good, but certainly not even close. We're talking about a 6-fold increase I would have made in these put options there, guys. So it's just like, just $10,000, just that's not there. So anyways, Chipotle, is this a stock I would buy? I would say I was getting pretty dang close to me buying these shares now. It's fallen so much, so fast. And now we're starting to get to a PE that's somewhat realistic. We're at a forward of somewhere around 27, okay? 27. Still, despite everything that's happened with this company, still one of the strongest brands in the restaurant game. And I'm amazed. They've done actually a really good job of that. I mean, to have everything that Chipotle's gone through, and to still even have comp store sales going up, right? To still even have revenue going up, that's a big thing, guys. Like, I can't explain how big that is and how big of an accomplishment management has achieved by, and of course you could say, well, management shouldn't have allowed this to happen in the first place. That's true. But to get the company back on the right tracks as far as getting back to growth in the amount of time they've done it, it's pretty remarkable. I didn't even think that was possible, to be completely honest, guys. I mean, usually E. coli type situation, norovirus, those things are like death to, a fast food place, right? They're usually just, I remember what happened with Jack in the Box back in the day, right? This is a long time ago. If you remember what happened with Jack in the Box, this might have been 20 years ago or something. Jack in the Box was a growing chain that was growing really fast and doing really well. And then they had an E. coli situation, some people died from it, and that tarnished Jack in the Box brand for the next decade or two, guys. Chipotle's been able to just bounce back from this like unbelievable. So it is a stock I would probably buy at some point in time. I'm just not sure it's quite at this prices here. Maybe it's got a little more shoes to drop. I know the short sellers are still shorting the heck out of this one. Maybe it falls a little bit more and then I get in, but just watch out for it. Maybe something I buy at some point in time, guys. So thank you for watching and have a great day.